this module, I will be covering an example of the let. Now, you should have a good understanding of what the let is and how it is used, again, with reliability, essentially. So with that being said, I will show you an example of, again, you can see the price action of the day and actually how it's used in a slightly different way. And I'll show you what I mean by that. So in the chart in front of us, we can see I have already two Asia ranges, meaning 2 days almost worth of price action. Of course, this day has not started yet. It's just Asia. Then we have Asia over here, and then the rest of the day over there. So we're essentially using the day before's price action as it becomes relevant to this. So currently with what we're seeing, we have to ask ourselves the question of what is our intraday target essentially? So this is also, by the way, you can probably see it's GF. So maybe a pair you're not so familiar with. So I would highly recommend backtesting it. It's a really nice one. So with that being said, what is our intraday target? So we will have highs and low targets on an intraday basis. It's just a matter of, I guess, the question we all ask ourselves, what will happen when, essentially? Are we going to induce the high first? Are we going to induce the low first? Are we taking out this trend line first? It really is that question. And this is why we use the confluences to help us understand what price is doing and then how we can trade with price. So what is our first confluence? I mean, let's think about where price is currently trading. So right now, at this very point, price is right at the end of Asia session. So in a few speckles, it will be, of course, outside of the Asia range, and Asia range has essentially formed. Currently, where is that? It's much closer to Asia high than it is to Asia low right here. So likely means price may induce high first before it then takes out this liquidity over here, mean of course also that part, as well as Asia low structures like such over here as well. And the reason why that is, again, we have to think about where price is closest to and the chances that price is likely going to induce high. So again, we have, ooh, that was horrible. Again, we have equal highs, price induces high. Remember, it's false. Why is it false? It's in Asia. Now, this is perfect. I really like this example because, well, let's get a straight line going, but you can see, not a straight line, but we basically have like a double top, both of Asia range. So you can see the previous day, Asia high was not taken out, the low was, and then of course, high is still intact. And now in current day, price is trading towards that Asia high. So we can see that price essentially will induce the high. So our target is the high. Once we've induced high, then it's essentially enough liquidity to then take out lower targets when it comes to an intraday level. So let's just remove my beautiful drawings. Asia high and yesterday's high. So it's perfect. They line up perfectly in the fact it's yesterday's high and it's both Asia highs as well. We have the trend line over here forming. See, it's like a quadruple top, as you can see. It's touched 4 times over here and here and here. And then, of course, our little baby trend lines forming over here and over here. Again, we also have Asia lows, etc., lower targets, but for now, we're kind of identifying it in somewhat of an order. So as we are close to Asia high, we can likely expect the inducement high as the first intention of the day. So you have been told essentially intention is important. So market intentions essentially. So market intentions essentially being the fact that we can likely expect an inducement high and then continuation lower, and essentially want to likely enter off zones like such when it comes to mitigations and the let essentially. So that being said, we have a reaction low. Okay, Asia high is not induced yet. We can see that. But what can we potentially also see? So price has now induced this. Lovely. We potentially have a midline. That's just a potential. So maybe price reacts there in Frankfurt Open. I think this is just above Frankfurt Open. It's really close to London Open, so probably the end of it. And then what we also have is these little equal kind of high type of liquidity over there. So we have a target to the high side as well as the Asia one. So we've got this as well as this over here. So likely we may have the midline trade, so the fast and Francturius, Again, if you don't remember that, we'll be teaching that soon anyway, so don't worry. And then also now remember the let potential. What could we potentially get? Potentially let potential. Do you see what I mean in that sense? That price has crossed over the equilibrium line and it can now potentially touch. Again, depends on the line over here. Maybe we get something like this. So that's a potential, right? Now, the only difference here that we have is we haven't actually had the inducement to take it as a let, essentially. And this is a 5M chart, so usually a 5M let is very highly confirmed. However, when it comes to refinement, you likely will, of course, need to look on the 1M just for your mitigation areas refined, essentially. So what I mean by that, of course, is exactly like this. So midline trade, take it. Inducement high, just ever so slightly, perfectly. Like it's so precise, it induces the high as well, of course, this fractal liquidity. Also, it's a perfect let. Now, this is what I was talking about when we use the let in a slightly different way. It doesn't occur all the time, but this can, now take this lightly, should I say, potentially help us understand when the inducement may end. So how you can take an inducement trade essentially if a let occurs, preferably the 5 minute as it's more stronger confirmed. On the 5 minute, we can likely expect now that our inducement lines up with the let at this point, as opposed to a mitigation. So we can likely take then the mitigations after that, whether we have any other lower confluences or not. We can just take a pure mitigation. However, again, take this lightly. I would highly recommend identifying these examples as opposed to just taking them so you can see it for yourself. So let's see what happens now. Perfect reaction. Now, the only thing here we have, our mitigation isn't the nicest. So you would take your imbalance, you can see right there. So that would be your zone. So again, it's not really like crazily confirmed when it comes to like these relevant structure breaks there. Price reacts lower, only to then mitigate there. I don't know why I did an X, but it should be a tick. Yeah, so with that being said, what happens? Now we induce our second bit of liquidity. Of course, this does not hold. So you could equally say it's a smart money trap, but it's also one of our trade types with additional confluences where you literally would only take it to Asia high and you close. So that's where it's key to understand that. Then, of course, this zone will be taken out once we've had our inducement. Where we are right now in price action is also really important. So we're currently here. Now it's the question of, okay, we haven't induced Asia low, but we've kind of induced this. What can we expect? Is price now going to continue lower? What's going to happen? This is where you essentially can be caught up in the build-up. I know a lot of people do, where you don't wait for the inducement and then you kind of want to take random mitigation zones. So of course, don't make up things. Now, a good example is here. Like it shows a let. You can see, right? It taps the line, which technically lines up here. It is a mitigation, don't get me wrong, but it's not the strongest mitigation from where we currently are in price action. So if anything, if you take that, it should be, hopefully, only a break even and not a loss. But nevertheless, you don't want to really take it in these areas. Now, again, that comes to the aspect of your leg like this. You don't really want to take a sell this far in the leg already. You kind of want to wait for more premium levels, whatever you want to call it. Yeah, so then that likely means, of course, what happens is we even get these lows, as you can see now. We have equal lows. So, of course, that then gives us intention that price will induce low. So what's happening now is we're likely getting an inducement of maybe some of this liquidity, maybe not all. So it could be like a partial inducement. Now, I made up that word. That's not a good word to use. Like it's an inducement, but it doesn't always induce every bit of liquidity. So it likely may just induce this structure point as opposed to the entire bits of structure of this trend line. If that makes sense, you will notice that as well. So that being said, we also have Asia low. So we've got target 1, target 2. Now what's our third target? Now we've also got, of course, this structure at this point, whatever you want to call it. Technically, the Asia low was the mitigation of this, but we want to take out both areas. So we also have this internal structure to be taken out, as well as this one over here. Why? Because they're not really relevant. They're yesterday's liquidity. Look at the timings when they occurred. They're not very important. So at minimum, we can, of course, stretch our target low to this point over here, which isn't that far off anyways. And again, depends on timing, where we can then identify potential mitigation opportunities. As this technically was an inducement, you can see the vector candles, liquidity, smart money trap liquidity as well. So for several types of liquidity, but because it was late in the day, we didn't necessarily get a mitigation, just got a strong reaction. So just clear all of those drawings. What happens now? Perfect. We get our reaction. So that's lovely. So we take out all of these bits of liquidity here as well as here. So it's a perfect intraday target. Look how perfectly it reacts low, and then you can really see price then shoots up a little bit higher over there. So again, this is an example where the entry necessarily didn't present when it comes to the let being the mitigation. However, we get our let being the inducement, which is pretty neat as well. So that being said, we have, of course, the inducement of Asia low and relevant structures, in the sense it's relevant liquidity in our eyes. So I hope that example made sense. It's a nice, quick, snappy one, I would say. Again, backtest these examples where you see the inducement being also a let, ideally on the 5M. I wouldn't say go on the 1M, as it's not as reliable or as strongly formed, I would say, when it comes to an inducement. So yeah, backtest them, find a few examples. Ideally with timing, like here it's perfect because we get it in London Open. That's perfect. As well as, of course, the let being the inducement. We obviously can't expect, when we were identifying the lead, we can't expect it to be a mitigation. There's just no mitigation. So that means that potentially we get a let, and that helps us identify when the inducement has ended in this case. So I hope that made sense, and I hope you enjoyed that.